So let's get into our topic here today. We still have about 10 minutes on our discussion topic, and that's where I get to shut up and people get to talk. And I assume Randy will be one speaking today. But we really just want to reach out and talk to what are people doing to finance their businesses. Everyone on this call, are you basically a cash-based business where you only spend what you make? Are you doing some kind of financing? We know, Jonas, you've done some. How are people going about, and what tools are people using to finance their businesses?
I would say a lot of people are typically either doing like a business line of credit, really to fund, it depends if it's how big the purchase is or if they need kind of revolving credit just in case. So there's quite a few different options, I guess, you could use to, fund your business. It also depends too, how old your business is, how young your business is. So it might have to go through SBA, or it might just be where, we can put it through, I would say two amounts, depending on the amount can, help with your approval. The other big thing too is, and I preach this a lot on the retail side and the business side, is having a relationship with your current bank is huge. Because the more they get to know you and the better the relationship you have, the more likely they're willing to lend to you and they're going to go to bat for you. So for instance, at M&T, we have a whole network of people that, we work with that are, that you may never meet. And they're kind of, on the back end of things, but they're the underwriters. They're the ones determining your rates. And for, if for instance, Dennis, if you came to me and said, hey, I need a home equity line of credit or I need a business loan, I can say, yeah, I know Dennis, he's a solid guy. He's not someone off the street. So it's really important, whoever you're banking with, that you have, that relationship with them. And I know in this digital world, it's kind of a lot tougher because you're not really going in the bank anymore. And I work at the bank and I don't blame you. It's a lot easier to take a picture of a check or, deposit in the ATM. But I always tell my customers, hey, listen, we love seeing you. It makes sense to do it digital, but it doesn't hurt to check in every few months and see what's going on with your bank, because you're the ones paying them. They're not paying you. So if you're just putting your money in there and you're not using all the resources, you're losing, because you're not helping anyone out. You're not helping yourself out. So I think it's really important. If I had to stress with business financing, it's really your relationship with your bank, and depending on obviously what you need the money for.
Got it. And then beyond the bank world, kind of the guerrilla approaches and other things, what are other people doing? Is anyone doing any type of, how are people paying for their business, their marketing, and what they're doing?
So I'll go. In my case, we're a website and digital marketing agency. We've been actually sort of paying the bank's role in some cases for customers with the pandemic and everything that's going on. I mean, even just this morning, I got a request from somebody, a customer and client who's down in Texas, saying, with everything that's going on, can they push out their normal payment date? Right. So I'm saying that. And for me and our business, we're pretty much, like you said, cash flow based, I should say. Right. So this way, we're not going after financing or anything. We're just kind of keep things tight. And because honestly, I don't know where things are going, and I'd rather know what my liabilities currently are and that I can easily make them, as opposed to getting some financing and doing some things that will add extra liability with the unknown of what those results would include.
Yeah. I know as an accountant, I'm often telling people, if they're not really sure where their business is, instead of attaching that credit card to their processing systems, like, with the tracking everything, attach the debit card, do it from the account so that the money isn't there, you're not spending the money, because it's easy to rack up those credit card charges on things when they're always constantly going through the credit card. And as we automate more and more of the accounting function, it is all about tying in a fund source, and the credit card sources are so easy to tie in that sometimes people get blown up by that a little bit. And I know that.
Well, Dennis, do you feel it's kind of a old school versus new school mentality, because I know like more of the old school, like older clients, yeah, they kind of work off the debit card, but more of the younger clients move towards the credit card. Like me personally, I'll admit I pay everything on my credit card because now it's easier than ever. As soon as it comes due, you just pay the thing, right? Like you don't have to worry about a statement and like, oh my God, I can't believe I dropped $500. You can track it in real time now.
Yep.
So I find a lot of, I would say the younger side are doing everything digitally, of course, and they're using the credit card to rack up. I get it, unless you're, depends how responsible you are, you may be racking up debt if you're not paying off the thing. But I would say on the debit card, you're kind of just losing money because you're not getting the points. But I also see the other side of it where you're coming at it as an accountant saying, well, now you're not in debt because use a debit card, it's automatically pulling out of your
account. Yeah, and that's it, because like we don't, anything we talk about, I mean, I never have a client actually do accounting per se, like we're always tying everything in to like Expensify, to the shop, to the systems, so that all the transactions happen. So, I encourage everyone to do digital transactions. So they're all doing digital transactions. The natural first step is to put it on the credit card. But then I said, then the more disciplined area is, if you really want to be disciplined, you get some points and what you get on those points. But if you're not sure, and again, as we get into times of uncertainty, like we're talking about now, you switch that out for a debit card, unless you really are knowing that you're making it. And it all depends on the discipline of the individual. And really, it's the opposite, in that it's the younger startup companies that they're going to conquer the world, they're going to do everything, who put it on the credit card, and then they don't realize it's gotten away from them before they have the chance to do it. And again, that's going back to in growing your business, when you're growing a small, a sole proprietorship type of business and some of those aspects. So that's where, and most of those, again, don't get bank loans. They can't get bank loans, in that kind of area.
Yeah, I buy most of my materials on like an Amex Plum card, but I pay it off early every month so I can get the 1.5% cash back. And, otherwise I wouldn't do it. But yeah, I'd use financing to buy my company and, and get working capital, for that. So, that's how, I have the company. It wasn't for being able to use that. Right. And, but, now you got to run it. So,
yeah.
So then I'm basically, managing it that way, where I'll pay things with the credit card, but pay it off every time for the cash back. But in my business, I'm not really buying anything until it's sold. You know what I mean? So if somebody says, all right, I'm gonna buy, 20 of these exit devices, then I buy it. So it's a little bit, it's a little different. I'm not buying things hoping they sell.
Right. And that's where and with my focus process was more on that growth side versus the existing operation side, and how are people funding growth, is really what we're looking at. Great. Any other questions, concerns, statements on business financing? And it doesn't sound like a lot of people are really doing much with that area. Is that the general poll that we're getting from the people who are on here?
Well, I'm echoing Randy's thing. I was taught when I was in that this training group last year to have a relationship with your banker. Deal with a small bank, have a relationship with your banker, and it certainly helped me with these second rounds of PPP, the first round of PPP, the second round, all that stuff. I mean, it helps things a lot, and helped me get a line of credit turned around pretty quickly. Those sorts of things. So yeah, Randy's 100% spot on. That was one of the biggest things they talked to you about is making sure you have a relationship with a banker.
And the to attest to that even further, again, it's common sense. I mean, if you have to borrow money in the real world as an individual, who are you going to go to? Are you going to go to the first stranger you came across and say, right, hey, can I have some money? Or are you going to go to the friend who's known you for 30 years? I mean, who's going to loan you the money? And it's the same thing with a bank. I mean, it's a business decision, but it's the same way. So.
Yeah, Dennis, I was going to, in hearing the dialogue here, I think it definitely depends certainly on the type of business and how pandemics has affected it. So a year ago, I think it was much more of a scramble getting the PPPs. They're available again this year, but a little different kind of rules. But what we're seeing is, if we were speaking to a bike shop yesterday, and they've been really disrupted in terms of their supply chain. So they can't get orders from 6 months ago filled. But then other businesses have really actually thrived and improved during pandemic. So it's kind of the fate's been a little different. But what we're seeing is really a lot of those small business owners relying on their own resources and the banks, the local banks. So they're just kind of hunkering down. I think they're trying to weather the storm right now, knowing that with vaccine delivery and probably second, third quarter, things are going to pick up. So.
Yeah, I mean, that's something I've noticed too. That's why one of the reasons why I was very curious to see what everyone thought here. It's actually people are cleaning up their finances during this pandemic more than getting crushed on these finances, and it's actually a pleasant surprise of what's coming from it. And Chris, I saw you had your hand up. You were going to say something.
Yeah, so I coach business owners. That's part of what we do, and I'm finding that most of our owners they eat what they kill right now. They're all doing so well, at least the ones that are around me. And they are cleaning things up, but now's also not a bad time to get the line of credit and to borrow money, because it's easier to get it when you don't need it, if you know what I mean. And we always refer them to Randy and the fine folks at M&T. They're our go-to, and they just do a great job with all our owners, and we're grateful for that. And it's because we have a relationship with them that they have a relationship with them, and it just works.
Excellent. Very good. We're coming up to the time, and I think we've gotten everything addressed. Any last call? Any input? Any questions? Any concerns?